Good morning, everybody in Stocktwits Nation. It is the butt crack of dawn out in LA where Shy and I are. Shy, what's up? Good morning. How's it going?
Morning, morning. Now you got to see my misery every morning doing this with the sun down. It's difficult. It feels a little timeless doing this kind of work, but when the
Yeah,
sun's down. But you should be
you're,
stoked. The Knicks did a pretty wild thing again, back to
yeah,
back games.
that was insane. So I was on the plane when the game was happening. So there's a lot of animated people, and that plain Chardonnay just hits different when Mikal Bridges closes it out again. So we'll see what's gonna happen. But yeah, I don't know how you do this every day, Shy. It's way too early to be talking about this stuff. It's too early to be talking to anybody. I have so much more respect for you.
I mean, I appreciate it. Now you know why my fiance is like super upset with me about agreeing to do this every morning because she is sleeping and then she wakes up to me talking about big tech and now she gets triggered whenever she can't have Apple anymore, for example, because she
Okay.
just it's just triggered when we talk about Apple.
Well, I mean, that's a good segue. So let's talk about Apple and Google because something pretty wild happened yesterday. A lot of people were talking about it. Apple's SVP of Services said that they're exploring adding AI search uh, engines such as Perplexity to their default Safari web browser. Google's just up against it lately. They got this antitrust trial going on. They got a lot of pressure on them with AI and Gen AI and search. Do you think the market's overreacting a bit to this news? Google definitely took a hit yesterday.
I don't think they're. I think they're somewhat overreacting because it shouldn't be down 10% in one day just based on that comment because the narrative has been there for quite some time. Google's trading at 18 times earnings. That's a heavy discount compared to other Max 7 names. And it's being priced accordingly to the narrative that search is going to become a commodity in this agentic AI, this post AI world we're about to enter. So I think that like the truth is Google is current valuation is in somewhat of a paradox. On one hand, it does look like it's going to be dead money where 55% of their top line revenue is coming from search. 90% of their profits comes from search. So if there is going to be an AI tsunami that's going to be hitting their golden goose of a business, there's going to be some kind of digestion period. There's going to be a re-rating that's going to occur. There's going to be an AI search overhang. There's going to be a multiple that's not going to really expand due to you don't know what the earnings were going to look like in 2 or 3 years when 90% of their earnings will get disrupted. But the other end of it is you're seeing their infrastructure side of their business absolutely hardening. You're seeing their Google Cloud produce a Rule 40 score of 46, and they have a $50 billion run rate. And even if you put in my head, if you put a 40 times earnings multiple on their cloud business, which I think is very fair because the Rule 40 score is a 46, that alone is an $800 billion company. So I think that is around $65 to $70 worth of their stock is just in the cloud. I put $25 to $30 in their YouTube side of their business. So now we have a sum of parts of, I don't know, roughly $100, and it's trading at $150 right now. So you need to ask yourself, is their search business right now worth $50 of their stock, a third of their stock price? And I think maybe if you believe, if you're part of the camp where you believe that this tsunami isn't going to be as severe, it's just going to be a high tide, then I think this is a great opportunity. If you're part of the camp where you think that there isn't going to be a world where they're going to survive, their search business will survive from this in 5 years, then you probably want to be on the sidelines to wait to see the stock continue getting re-rated. When the search side of their business will start becoming less and less of an allocation towards their total revenue. Where in 2 years, the way that the cloud business is going and the infrastructure side of their business is going, it might start becoming much more of a allocated weight in their total revenue. Like let's just say in two years, it's going to start becoming 60% of the revenue, and now search is going to be 40%. That's a different story than right now, where 55% of their revenue is sales. I mean, it was search, but the issue is like profitability. Like all their earnings are from search. So like there is going to be a heavily digested period where the stock might not go anywhere anytime soon. And it doesn't matter how cheap it's going to be. People just don't believe those earnings are going to be a similar type of earnings in a couple of years. So it's a really delicate balance right now. And I think that um, Google has seen the tsunami come 5 years ago. And I don't think they've done the necessary moves to get ahead of it. So I don't really have confidence in them doing that right now as well, because they just haven't been able to get ahead of it before. It's a it's a really interesting paradox, and it's a very noisy stock. And when a stock is very noisy and I'm underwriting going through a re-rating, I don't want to participate in that opportunity cost of dead money. Like I experienced in Snowflake in 2024. It really didn't move much because it was going through a re-rating from AI is going to cannibalize them as a data warehouse company to what I believe to them to be as a data backbone of enterprise AI. But that re-rating is still in the process. Like it takes a lot of time. So yeah, I think it's unfortunate that Google didn't have the leadership in place to get ahead of this, and now they're feels like they're playing catch up. But also like their Gemini product is chef's kiss. Like it's
Mm-hmm.
widely known as the top LLM out there, but the issue is that LLMs are also a commodity. So they're both of their chef's kisses is kisses are search and LLMs, and both are becoming a commodity. So now you have to see like, oh shoot, they're being priced as a commodity, but nobody's really talking about their infrastructure side of their business.
Yeah. This is definitely one, like, I feel like I bookmarked this. I'm like, I need to sit with this over the weekend and dig in because there's so many layers to it. The Safari piece is interesting because Safari only has 18% of market share, but it's a lot more on mobile because that's default. And I think this goes back to some of what you were saying yesterday, Shy, about just the need to have hardware and software together. Google kind of gets their ass kicked on the hardware side. Android's obviously the number two, but Apple is the dominant force. So Apple controls a lot of that ecosystem. And then you have the antitrust stuff where they're pushing to make Google divest Chrome, which is their browser. So Google's just getting hit from a lot of angles. I would not want to be in their legal team right now. And I do think though it's interesting, like the all of the commentary around the death of search. I think it's going to take a bit. There's so much money flowing into search. There's so many consumers that still rely on search, and a lot of commerce is done through search. But I do think the writing's on the wall. We talked yesterday about Google testing um, ads within chatbots. And also, when Daniel Newman was on last time, I think he brought up a good point of just how embedded Gemini is in everything. And so Google's dominating your workspace, your personal Gmail, where you store files. And for most people, Google is like the default. Gemini is becoming more and more embedded. I opened my Google Drive yesterday and like a little Gemini assistant came up and was like basically like, how can I help you? And so now there's functionality. I haven't played with it yet, but I'm sure I could say like look through everything and tell me this. It's like my drive becomes my own personal LLM. And that's just embedded. I don't need to go to a perplexity. I don't need to go to a Claude. It's just infused in the product. And I think that's where Google can really play. But they're search giant. That's what they've known for. So it's going to be interesting. And I think you touched on this too. There's a lot of dead stocks right now. It seems like a lot of people are just kind of sitting there, waiting around. And for people like you looking at the market, you're thinking, I'm going to wait it out.
Yeah, I mean, it's a $1.7 trillion company. Usually, companies that size aren't going through a re-rating. It's opportunity. Like I don't see much opportunity for companies that are above $1 trillion. Like Nvidia, I believe, is going to continue becoming the kingpin of the new digital economy, and AI has no ceiling. Nobody really knows the ceiling on that. So that's one I'm willing to take a risk on. Amazon, they have their hand on every single early secular growth theme that I want to be a part of. And I think their margin expansion opportunity in the e-commerce side of the business is violently under discussed. And I think they're quietly leading the logistics robotics theme that's going to really help their e-commerce side of their business. And it's not e-commerce side of the business is essentially free right now, the current stock price. So I think that's also a discount. But other names, I mean, I think Meta is the move has been made. I think Meta is printing cash, but you also have to ask yourself like, all right, what's the next catalyst? It has to be AR VR, uh, and I think that's for Google, for example, as well. Like their search side of their business is softening. You can't disagree with that. Like search is for sure going to get disrupted in a way. YouTube is only growing 10% now, and even then, like that feels like that's weakening a bit. The infrastructure side is absolutely hardening, but it's a paradox. You have to ask which side is going to benefit more. Apple, oh my God, Apple is their China exposure is huge for Apple, absolutely massive. And yes, their service side of their business is growing, but don't confuse this company as anything other than a hardware company. It's selling iPhones, iPads, Macs, etc. And this tariff battle that they're experiencing right now is it's substantial. Like you can't just like brush it off or that they're gonna figure it out. They're going to make a lot of money. They have so much cash that they're gonna buy their way out of it. That's not the case at all. I think last quarter we got some commentary from Apple's management that the impact of tariffs are going to be over $900 million. Great, because I think a lot of people on the street were expecting 1.5, $2 billion. So it's definitely under what a lot of the street estimates were. So I thought that would catch a bit by itself. But at the end of the day, like I mentioned, they're a hardware first company, and most of its revenue depends on moving devices around the world at scale. And any disruption to that flow is going to hit fast and hard. But I do want to give their management some applause because like they did see this coming. Like they've been slowly pivoting to India over the past few years. In 2020, when all that COVID mess started happening, like India produced none of the world's iPhones, and today it's producing close to 20%, and it's climbing. So that's a huge move, and arguably, it's the most important supply chain shift in tech, especially because if it works, it gives a blueprint to a lot of tech companies out there to not have to solely rely on the eastern part of the world. However, it's not that easy. It's not a flip of a switch. You have to like ask because India doesn't have the same factory scale or labor experience that a Foxconn Chinese plant has. The supply chain there is still developing. It's still very green. So while Apple is diversifying away from the East to India, it comes with short-term friction, such as higher cost, tougher road to margin expansion. So, like, I think that Apple is still playing defense into the geopolitical uncertainty, into this high-stakes poker game of Trump versus China, and there's going to come some margin pressure and supply friction, and it's a transition year for Apple. Like they're not in a crisis. How could you be in a crisis when you're printing $100 billion last year? You're going to print another $110 billion this year incrementally. Like they're not in crisis. They're just somewhat in motion, and that motion is away from China into a more politically safe future, and that takes some time to build out.
Yeah, there's swirling commentaries. Apple washed. It's like, I don't know, man. Like, look at the numbers, look at the scoreboard, but there is criticism around like, all right, what have they done lately, innovation wise? But even just to your point on, I want to get into there's some breaking policy drama, but I was in an Uber yesterday and the driver, not known for their market commentary, I will say, but fascinating conversation. But she was telling me about the port of LA and how like she used to have so many rides out there, and now like no one's ever just sitting around. And then she got into she thinks China has aliens from the lost city of Atlantis that is building all of their technology, and she feels like there's a dark energy coming from. So I'm like, okay, I can't. I'm just nodding. She's telling me to look up TikToks, but that is the extent to which Like, this woman is locked into the port of LA in a way I was not expecting. It was nuts, and I never know what to do when I get in that situation because I'm just like, yep. She told me Trump got forcibly removed from the Met Gala. I was like, that didn't happen.
You're pitching why Waymo's gonna blow up.
Yeah. Oh, that was the other thing. She's like, I almost got hit by one of those self-driving robot cars. They were doing it on purpose to Uber drivers. I was just like, all right, it's 1 a.m. But
Jeez.
yeah, it was something.
Tin hat theory.
Yeah,
Wow.
it was, one of those nights. But on the policy front, so yesterday there was a Truth Social post that I thought was hilarious because it was like hinting. Again, we talk about it. It's like wrestling, reality TV. They're like hinting at storylines. He's like, there's a big country you might know about that we might be doing something with. Stay tuned. It rhymes with United Kingdom. I was like, all right, dude. Like, and then today he's like, yeah, it's the UK. And so of course the UK is like the sacrificial lamb because I feel like we're still like trolling them from the Revolutionary War. But the markets are a little bit green on the news. We're apparently going to get more info today. They're going out first. Kind of sucks to be first. You're just trotted out there as the example of who we've dealt with first, but that's the first big one to come. Hopefully, that means more are coming. I'm curious to see how this is framed because this is anything like any other sort of legislation. This is not like a tweet-sized deal that you can summarize and post. Like, there's probably so many nuances and if this then that, and concessions given, and so it's going to be interesting to see the structure of the deal, how it's communicated, how the market reacts. And yeah, is this the new thing where like every night we get like a preview of like, okay, this country used to be a dynasty in the 18th century, and like it's like we're supposed to guess.
It's ridiculous. But
Yeah.
I mean, I don't know. I think this is actually the market will fade this move today. I think we already got some commentary that the blanket tariffs of 10% is going to still stay between UK and US. So like I'm asking myself like, all right, so what's the new deal then? Is it just some distraction under the hood when the real meat of the deal is essentially the same? And also it's the UK. It's yes, I know they're the fifth largest trade partner for us, but like this is like, don't confuse what's driving this market correction. It's US and China. Everything else is just noise. Those two nations are the signal of when this is going to end. Until then, the market's going to be trading just be paralyzed a bit. It's going to be just like trapped in this no man's land, and we're still under the 200-day moving average. Even right after this bid, like we're up 1%, but like we're still over 1% away from the 200-day moving average, which we got clearly rejected last week. And that's kind of when reality sets in, when we get closer to that technical average. It's not just a random technical line in the sand. Like it's a real TA that everyone watches. And that's when we either go parabolic and we go through with volume and like new regime and this price market action, or we get rejected and it's status quo and people don't really want to be participating in the market. They're still in defense mode. Like I've still been in defense mode for over a month. So I think that this might get faded today. I don't think it's much. I think also that earth-shattering move that Trump called out, like it wasn't even with the nation. It was based on a Medicare program. So I'm
Wait,
like,
he announced what it was? I missed that.
yeah, I think I saw it on Twitter. Maybe it wasn't officially from Trump, but it's essentially went spread out. It's something about a Medicare program that's going to be revised a bit. I'm like, okay, so you're just it's just crazy.
Yeah, the thing with hyperbole
craziness.
is if everything's hyperbole, nothing is. So, like, if something earth-shattering does happen, we're gonna be like, all right. Yeah, this is wild. It's funny just how it's the agreement with the United Kingdom is going to be a full and comprehensive one. All right, good. I'm glad. But like, why put that out there that way? I think this is all going down, by the way, in 40 minutes, 10 a.m. Eastern time. So tune in on C-SPAN or wherever you watch this nutso world unfolding. We had some other like oddball news in the market. I don't know if you caught this one, Shy. Yesterday, Sam Altman basically broke news that he had essentially poached the CEO of Instacart. Normally, when these announcements go out, there's like a cadence. There's multiple people working on it, and it's like the company that the person's leaving has sort of the first message, the first word. The other company has their statement. It's all coordinated. He just tweeted it. He was just like, "Welcome," and everyone was like, "Wait, what?" Like there's no official comms, so I don't know what happened there. But then they kind of walked it back, and I guess she's not leaving immediately, so she's kind of like shadow CEO at OpenAI and I'm all for women CEOs. If she's CEO twice, that's freaking great. But it's a bizarre kind of move, and I'm curious if we could pull up the Instacart chart and see what that looks like, because that was a little out of left field. Instacart is not a company I closely follow in investing, but it is one I use weekly to a fault. So yeah, I'm curious if you saw that, Shy, and like Instacart in general, what's happening? Yeah, what's happening with them today? Because that never, like, if you're that does not, you're in these rooms, that doesn't happen that way. Like someone's getting in trouble.
Yeah, first off, like I didn't even hear about the news. So you just mentioned it, and that's crazy. She's gonna do dual job. Essentially, she's treating Instacart as her like Bruce Wayne job and opening as her Batman job. That's crazy. That's wild to me. So she's gonna become the CEO of the OpenAI's applications part of their business. So like very interesting. She's leaving Instacart, a full enterprise on the publicly traded stock market, to become CEO of a segment under a company. That's craziness to me. Must be a fat package, equity
Oh yeah.
package, etc. But I don't know. Instacart, it's a commodity of a business in a way. I'm looking at their financials. Like they're growing 8% top line for the next 4 years. There's no margin expansion opportunity that's estimated right now. They're just I'm shocked how they're hitting maturity a bit because they're just Rule 40 score of 30, and it's going to be like that for the next 4 years, 5 years. I'm like, all right. So they're trading at 13 times earnings. So they're discounted. That's telling me like the market is viewing them as a commodity, and there's no levers to be pulled in near term next couple of years for them to buck that narrative. So she's bouncing ship because there's nothing she can do, and she's never going to be priced accordingly because their business model is a commodity. So she's jumping ship to the next exciting thing, and I don't blame her. But if how is this only down 6% pre-market?
Yeah.
Maybe it's because they're super cheap right now, already at 13 times earnings. But this feels like an acquisition target into someone's ecosystem, and
Mm,
who knows? Maybe Amazon Prime maybe needs some kind of Instacart delivery service for Whole Foods. Maybe that's a better one, or
yeah.
maybe Serve Robotics does some kind of partnership with Instacart where like I, I, I don't know, like it's
Like
not going to be a
googly
standalone
eye
business
robots
anymore.
gonna bring me
Yeah.
my cheese and crackers and seltzer. Uh, that would be. I actually was wondering. I was thinking after we were talking about those googly-eyed robots, Shy. I'm like, why aren't they in New York? New Yorkers would just mess with them. Like I'm looking at clips outside of the garden last night. I'm like, New Yorkers would not
Well,
take kindly to these things roving around.
first off, New Yorkers do not respect the laws of jaywalking and the street lights. So like
Yeah,
the robots will go crazy. Like robots won't ever go anywhere. They're just gonna be waiting, and then the drivers also don't respect it either. So like I don't think New York is ever going to work for those robotic companies, especially
yeah,
Serve Robotics. But you're going to see them in LA. LA is everywhere,
yeah.
especially in the Hollywood Beverly Hills area.
We'll get used to them eventually. We had Mayor Adams rolled out these like roving robot things that were supposed to go around the subways. A company called Nightscope, which is I think publicly traded. Um, and people were like pushing them, kicking them. Uh, they had to roll like it was like a week, and they're like, "All right, that was fun. You guys are crazy." So we'll see, but yeah, I think that is an interesting move. And yeah, I saw the headline about Instacart OpenAI, and I'm like, man, the moonlighting is getting out of control. She's doing both. She's got two fat paychecks. I'm like, good for her. Get your bag, girl. But it's wild out there. I feel like today is a day of like weird news, which I don't mind, but I think there's a lot of like weirdness going on. I was just checking in on Flutter. I think DraftKings, I don't think they reported yet, or they're reporting today. Flutter reporting, the other big sports betting conglomerate. I always love following these guys because it's always tied to like things I'm following personally. They had a rough quarter due to customer friendly results. I always love when this happens because it's like, well, you just, you know, you guys lost. The house lost, the users won. And so that definitely weighed on them, specifically during the NCAA tournament. So they missed on top and bottom lines for the first quarter. Anytime sports betting and gambling like goes down, I'm always like, what's going on? Because I just don't see it going any other way but up. Do you have any takes, Shy, on like Flutter versus DraftKings, now Robinhood? Again, like this feels like one of those commoditized spaces that you talk about so often.
Yeah, I mean, I've been a pretty big bear on DraftKings due to my vision of them becoming a commodity. It's a commodity business. I know there's a lot of people who are bullish on this theme, but like bullish on weaponizing degeneracy, and that's a whole thematic. But I just think I don't know. You just saw how easily Robinhood just became a competitor. It didn't take too long for them to, when they offer those predictive markets tools during March Madness, like how much volume went towards there than DraftKings and FanDuel. Like your capital is in your brokerage account already. It's super seamless to just to make the bet. It's sitting right there. When DraftKings and FanDuel, like as a former degenerate, you guys don't know the psychological heartburn it causes when you run out of money and you have to deposit more money into that account. It hurts because it's just a reiteration of like your failures. You failed, and you're probably gonna lose this money as well when you put it back in, and it just sucks. But in the brokerage model, like the money's there, and hopefully it doesn't go to zero because then you're a schmuck and you sold off some assets to bet. But either way, like, I think DraftKings, I just don't see a world where they get any kind of premium valuation. I'm not saying they're going to zero, but their market leading status, like I just don't think it's going to be there in 5, 7 years, especially when everyone's saying like the federal when it gets federalized, federally legal sports gambling. By the way, who knows how long that's going to take? Like it's not going to happen in near term, but when it does, I do think that opens a floodgate for the bigger players to get into that space. You're already seeing the Amazons, the Netflix, the Apples already get into live sports. Do you not think they're going to also get into sports betting as a synergy to that live sport initiative? Absolutely. It does make sense for them not to. And I'm not even factoring in ESPN or every single hotel chain, the MGMs in Vegas having their own app as well. To like all the brick and mortar degeneracy is going to turn into on being online. It's the same thing that happened for retail for clothes. Everything went e-commerce. There's gonna be e-betting everywhere. So, like I said, as a former degenerate, I know I have no loyalty to the brand. I follow where the best bang for the buck is. Now that customer acquisition costs for DraftKings will always stay elevated, maybe even the argument is gonna continue going up as bigger players get in the space, and there's gonna be no margin expansion opportunity. So
Yeah.
that's part A. Part B is maybe the market expands drastically when it does, and even if the market share diminishes, the total market 3, 5x's, and DraftKings will just high tide resolve both. That might be the case as well, but it's a noisy stock.
Yeah, it is interesting thing. What is the moat in sports betting? Is it like the UX? They're all sort of similar. It might be proximity to the rest of your money, which makes what Robinhood's trying to do very smart. Slide a little from the Roth over into the Kentucky Derby. I know that's
How
not the
dangerous is that though? That methodology. Like I hate the ethos behind that, but yeah, you're right.
yeah, but it's funny. I used to be more like Puritan about it, and now I'm like, I get it. I get it. And I also feel like Robinhood is usually the first of these companies to like stick their neck out on things like this. And then like I don't think it's crazy to believe that a SoFi or another brokerage would add prediction markets. I just don't down the line. So I feel like they're always sort of like they're like willing to kind of do the edgy thing and then eventually it gets adopted and then everyone does it. I think it's just catching up with behavior. There is the opening bell. Let's take a check on what's going on in the markets, guys. on this lovely Thursday. The futures are up 200 points. Of course, we're waiting this US UK trade deal. It's mysterious, comprehensive, beautiful trade deal that's coming. So the Dow is up 0.5%, S&P up 0.7%, Nasdaq futures up 1%. We're still riding the wave of earnings week. We got, as we talked about, we have DraftKings today. We had Uber yesterday, which I want to talk about. I was reading this morning, a lot of these QSR companies, Shay, are getting just hammered. The Krispy Kreme had a terrible, terrible earnings. And then Burger King also, I think they withdrew or revised their guidance this morning. There's something interesting happening in QSR fast food, particularly with as prices go up. I've seen a lot more commentary around just how much so-called cheap fast food costs. Somebody on X the other day said they got like a regular Chipotle bowl and it was like $18. And that's interesting to think about when it gets to the point where it's no longer cheap comparatively. Are you going to just go to the store? Are you just going to spend $10 more and go to like a sit-down restaurant? I think the lines start to blur there, and I wonder if that's what we're seeing with some of the Krispy Kremes, Burger Kings, that are all coming out and saying, yeah, their same store sales are down, their traffic's down. It'll be interesting to see like a Cava, because they've been on a tear, when they report, or a Sweet Green. But some of these fast food joints, it's rough going because they're not, again, going back to they're not competing on price really right now. And so it's like, I don't know, you want like a sloppy Chipotle bowl for $20, or do you want to just go to a normal restaurant and pay 25? I think that's the decision some people are making right now.
Yeah, I mean, I think that is the first lever that gets pulled is just like, all right, buckle buckle up, let's just cook inside and stop being such a lazy um, F, essentially, and just like just cook, be normal. Like so I think the prices are ridiculous. Like I'm only 31 and back in my day, I remember buying $6 Chipotle bowls. Like that was a real thing.
Oh
And
yeah.
I was like, I can use a $10 bill to get a drink, guac, and a Chipotle bowl. I'm like, now it's $20. It's kind of
Crazy.
crazy. So I think that's there needs to be a trend. There's going to be some kind of change, and there has to be because the wages aren't increasing that much. So
Mm-hmm.
other than that, I'm sorry. I'm looking at one of my stocks. Like Axon is. You guys know I talk about Axon all the time. They reported their earnings yesterday. They're up 13%, and
All right,
they're
give us a
catching a
rundown of
major dip.
that.
So they are yet again proving they are the control center of public safety of the future. The new age defense bucket. Like I could call it out for who knows how many times. Katie's probably so sick of it. But I just
Drink
there's
every time Shy says new age of defense.
but the new age of defense is like, that's why I've been positioning my portfolio during this pullback because that is this it's a safety blanket of all this macro chaos. Like it's
Yeah.
going to be the stickiest component of any IT budget. And Axon is proving yet again that the macro doesn't matter too much to them. They're going to continue to deliver outperforming the market, outperforming estimates. Doesn't matter what happens to China and US. They're going to continue just printing dominant numbers, and they did it again yesterday. I'm looking at my notes from them yesterday. Um, let's see.
Yeah.
Yeah, so they grew 34% top line growth. They beat by $20 million. Easy beat on the EPS, $1.24 estimates. They came in at $1.41. EBITDA, same thing. It was a 10% beat on the top line. So, but again, they're not just a hardware company. They are an ecosystem. Like Katie asked me a question earlier this week or last week where what's another company that sells a hardware but also sells the software around it? I mentioned Axon was like one of the few out there that's very similar to an Apple business model. And their cloud component, the software around their hardware, that's growing 39% year over year. And that's scaling up drastically. So top line's 34%, but their software component is growing 39%. And that's a higher margin business. So that's like continue growing and growing. And there's not many growth stocks out there that are growing above 35%. I can name two. Palantir and Axon. Oh, what bucket are they in? The new age of defense. Interesting how that works. So like I think that this is like one of those names where like people got scared off in valuation, but one of the things I've learned in my investing journey is you have to pay up to get the Nobus of the stock market, like the highest quality, like bouginess, whatever you want to call it. Like you have to always pay up for it. And whenever the macro punishes all stocks, doesn't matter what quality you are, that's when you kind of allocate your soldiers towards those top notch quality names, even if the valuation is higher than everyone else's. Because guess what? It will always have a premium valuation. Microsoft has always had a premium valuation, always. And look at the last 10 years. It just doesn't matter. Like they continue being estimates. That's all that matters because valuation's hyper subjective. It You can say it's cheap, expensive. There's no golden rule or bible of like what it should be. It's very subjective. But what you can actually bet on is, do they outperform estimates? That is binary. And these high quality companies, they do that. That's part of their DNA. So another name that has a high, great, incredible mo is Mercado Libre. You guys hear me talk about this all the time. Like they have a
Not
monopoly.
in the new age of defense.
Not in the new age of defense, but essentially in the what? How do I?
You need another tagline for them.
I don't want to call them the Amazon of Latin America because so played out, but
Yeah.
they're just the media. They're just They're the PayPal. They're the Amazon. They're the Chase. Like they do everything for Latin America, and their numbers yesterday were just insane. Like again, I'm gonna say with the caveats, the dollar helped them out this cycle. So those
How
are
so?
massive B because the dollar got a bit weaker. So now it reflected more in their top. Like right now, the estimates were 5.5 billion. They came in at 5.9. That's a massive beat. So, but FX neutrals, take all that currency noise out. They grew the top line 64%. And that's with 10 to 12% margins. And their GMV is growing 17%, which is their gross merchandise value. Their total payment value, TPV, which is the Mercado Pago, which a lot of people just view them as an e-commerce company. No, they're a full ecosystem, and it's proven by their total payment volume as well. Like how much actual transactions are happening in their platform. That's up 43% year over year. The unique active buyers alone is up 25% year over year. But the biggest, like, what is happening is Argentina. You guys all know what's happening in the macro side of the Argentina. Like, their new El Jefe is just killing it right now for them. That was the major segment for Mercado Libre. That was up. FX neutral, up 126% year over year. Huge outperformance. Everything else was Brazil was up 30%. I think Mexico was up 20 something percent. That was the major driver for Mercado Libre, and I don't know about you guys, but I think Argentina is just getting started. So like, I think that's going to be a major driver. And also, like I mentioned, ecosystem, their ad side of their business is freaking blowing up. It's also up 50% year over year. So like, they have their ad business, they have their fintech side of their business, they have the e-commerce side of the business. Like they're just a full suite into like capturing the growth of Latin America. And I think that this is a name that is it's hitting all-time highs. In this tape is very impressive. And again, during this pullback we had in the market, like that's when you reposition towards these winners because everything got punished. And now earnings is when they produce and they're going to catch a bid. Even the market's fading right now. QQ is only up 0.8%. These Palantir's up 4% as well right now. I don't know why they're catching a bid. But these like names with moats are just catching bids because they keep producing.
So for somebody who's watching who's like not as deep into Mercado Libre, kind of interested in what you're saying, like right now, what multiple are they trading? Is it one of those? Is it late to get in? Is there still a lot of upside in your opinion? It sounds like you've been following them a while. If someone is just coming across any of these companies you're talking about, how should they determine like when a good time for them to get in based on their goals might be?
So I love to use entries for new positions. So for example, Mercado Libre, just go back to the January 2023 anchored average VWAP. That has been the buy level. So every time it's hit that October 2023, April 2024, it's bounced perfectly. So a lot of new buyers came in at the beginning of 2023 because that's when we
Mm.
started the major rally in the market. So a lot new characteristics are reflected in that average VWAP because it's the average volume and price that investors have paid during that timeline. That line right now is at, geez, it's at 1600. So that's something I'd be focused on, of like adding there. I'd probably be pulling back, but right now they're trading at 20 times EBITDA, 28 times EBITDA. They always have a geopolitical discount associated with their multiple because it's Latin America.
Yeah, can we get
Who
a
knows what
visual on
happens
that
down there?
Argentinian president? I just like looking at
Yeah.
this guy. He fascinates me. What's his name?
But
Javier.
yeah, Javier. What is that
The
name? I will.
haircut. How is this real life? I'm sorry. I'm not. This is so not even having to do with policy. Oh. So yeah, but he's when you said he's called El Jefe.
I just called him El Jefe. I don't
Oh,
know
oh, you made
who.
that. Okay,
Hopefully,
that's a shy
I just
special.
I just
Uh,
made that up. Yeah.
Interesting. Yeah. No, also, not to go back, but you forgot to mention a very exciting update from Axon, which I'm reading about now, which is this taser dart. Did you see this? They're announcing a taser dart. It's
Teaser dart. I
called
haven't gone.
it's a next generation Apollo dart that really gives us a shot at displacing lethal force, which is, I think something a lot of us can get behind. But as somebody who carries Canadian grade bear mace around New York, the Apollo taser dart intrigues me. And I'm going to have to, I don't know if this is for consumer use, but fascinating development that I think they just announced today. So we'll have to check that one out too, Shy. Maybe we'll have to go test them out.
I mean, yeah, totally. Just test them out. But no, I mean, unfortunately, like I mentioned, the phrasing of Axon, like the controller of the public safety, control center of public safety, like that is something that is only going to gain momentum because the world is becoming less safe.
Mm-hmm.
So I think this is a name to watch, and I think a lot of people are um, just are unfamiliar with the name because like they don't have the Palantir showmanship, but they are just as disruptive as Palantirs in my opinion and
Mm.
what they do. But for Mercado Libre, one last thing I want to touch on is 5% of all the companies are online in Latin America. 5%. There's so much runway, huge runway.
Whoa.
So that's why like, people are like, it's not too like when you ask me, is it too late to get into Mercado Libre? Like, I don't think so, just because I'm so bullish on Latin America thematic. It's going to have a massive runway, and they're doing everything as being that disruptor, like what Amazon was doing 10 years ago. I hate using the reference to Amazon, but it's just so accurate for Mercado Libre. But yeah, that's one of the names everyone needs to watch out for. Same with Axon. Like names
Yeah.
who are outperforming in this tape, in this macro environment, you have to take a note of because it's showing resiliency. And that's something
Yeah.
that's very important to factor into your investments.
Yeah, I think that's something you brought up a while ago, and I still think about it. Who's not faltering right now, and why? Yeah, the Amazon comparisons always makes me chuckle. I forgot what company it was, but it was some startup was launching, and it was like such and such raises to become the Amazon of South America, and I'm like, yeah, there is an Amazon in South America. That's what the company's named after. But it works for everything. We talk about Robinhood wanting to be the Amazon of money. Um, lots going on. Let's look into what else is happening in the markets. Uber. I mean, let's talk about Uber since I just had a wild Uber ride. So they reported earnings yesterday. Shai, did anything stand out in what they divulged in the readout?
I mean, they're hyping up Waymo pretty much a lot. So it's like, I think there's definitely bad blood between Uber and Tesla. 'Cause I think Uber's been very open. Like, we want to partner up with you guys. Come hang out.
Hmm.
But Tesla's like, You're being way too thirsty. Like, I like to chase my companions. No, I just think I don't know. Uber's. it's again one of those. Uber and Google are very polarizing, high quality companies. There's a narrative that's following them or overshadowing them that's causing them to be discounted. I feel like that disconnect is what causes outperformance or just complete duds. Uber yesterday, like they're like you mentioned, for people aren't spending as much money going out. They're staying in. Like that is what's going to hurt Uber, and that's kind of those kind of recessionary environments. So like they produce really strong numbers in my opinion, but like there is an anchor on how well they can perform because through all this macro chaos, it's causing consumers to second guess, and that second guessing is hitting the bread and butter business. So it's one of those again. Do you want to hold a stock that's is going through this kind of a headwind, or do you want to reposition towards names that are thriving in this environment? It doesn't matter what environment they're in, they're going to be thriving. The Mercado Libres, the Axons. Palantir is thriving. Don't confuse their price action post to earnings. Like that was elite numbers, just super expensive. We'll say Tesla's also catching a bit right now too. It's up 4%. While Qs are fading too. Like I wonder if some news dropped on them, but yeah, I mean, it's a stock pickers market this year, and it's really showing on who's outperforming, who's not. And one name that I've gone completely wrong on, that's just like making me look like the biggest schmuck in the world, is Hims. Hims is up 110% this year, and that's one of those
Oh
names where I
my
just like
God.
I don't know, maybe because I have a full set of hair that I just don't get the product. I don't know, but
I would
I
say
just
people be bald and shy.
people be balding.
People be balding, that's a good that weight loss. I mean, anything tied to like a vanity metric, it's a good business. But yeah, I think I appreciate that you call out when you were wrong, because we can't be right all the
I've been
time.
very
And to
wrong
your
on
point
this
about
one.
this,
Yeah.
yeah, the stock pickers market's interesting because I'm trying to find this. Schwab released a sentiment study of their investors, and it's like they were saying basically the vibes are the worst they've been in like years and years. And I read it and I was like, that's weird because I like talk to you every day and you seem fine, but your portfolio probably looks a bit different than the average person. But if you are really into geeking out, like you said about like who's actually doing well right now, who has a moat, this is actually a really fun time to be an investor, it sounds like. And I'm curious, Shai, if you've like, are you in like discovery mode right now where in your free time, are you looking for other companies that are sort of bucking the trends and why? Or are you kind of just like, I got my winners, I got my team, I got my squad. I'm not looking to make any trades.
No, I'm always looking. I'm always doing some research. I have a watch list for sure. I have some names that are in the doghouse for sure. And I want to switch and baits them. But no, I mean, right now, I don't see any discounts right now in the market right
Mm.
now. So that's the tricky thing where I feel like the market's bounced 20% or so. Maybe that's a little excessive, but it bounced significantly in the past month. I'm like, this is not when I pull the trigger, like especially on the 200-day moving average. Like this is when I get defense. Especially I said we're gonna fade this move. Like we're fading right now. Like we're only up 0.6%. I think that we're not getting enough clarity to convince everyone that the foundation isn't shaky anymore. Like it's still shaky, and that's gonna cause people to like stay on the sidelines until there's solid ground. And we don't. I'm not getting any screaming discounts right now in the market. Like there's certain names I'm like, God, you're so freaking annoying. I can't believe I gave myself to you essentially.
Ooh, who's
But
annoying?
who's annoying?
Drag him.
Drag them. I mean, I'm looking through my report right now. I think that so Trade Desk is reporting this afternoon. That's a name that's just like
Okay.
I'm like, do I want a standalone ad business when I just said Mercado Libre's ad business is growing 50% and that's just not standalone? It's part of their ecosystem. Like, do I really want a standalone ad business? I'm not really too bullish on that thematic. I already get that exposure on Amazon, Mercado Libre, even Unity. Unity is another one that's just like, it's not the new corporate governance. It's the old dogs from 2 years ago that are still like causing them to get through uh, all the fat and trimming that fat, and takes a while to do that. But yeah, Trade Desk, like today's reporting their earnings, and like that is one name where like I cut bait or I need to see real visible signs of them outperforming because CTV numbers were really strong from Roku. Advertising numbers were really strong across the board from the bigger players. Magnite yesterday showed really a ton of strength on the sell side. AppLovin had a weak guidance, so like that was like oof, that was weird. Actually, I wonder what they're doing right now. They caught a major bid. Yeah, they're up 13%. So I think that if Trade Desk doesn't like outperform this low bar that a lot of the sell side have on them because they're really one of the worst prints I've seen in quite some time last quarter, that's worrisome, and that might be thesis breaking. And it's because thesis is cracking a bit last quarter. The people I've talked to in the channel checks I had was execution. They had no CEO and the new AI platform that they were launching. Agencies hated it. They did not communicate the changes effectively with those agencies. So when the agencies were going on their platform, like they were confused because a lot of the features that they loved weren't there anymore, and it was just overly complicated. It was too engineered. Agencies aren't engineers. Like they like efficiency, speed, simplicity. Like that was not what this new AI platform that they are launching was. So that was like that's a massive disconnect. How did that slip? Because there was no COO. I think they're
Mm.
looking to hire a new COO. Hopefully that gets announced today. But like Jeff Green is incredible in what he does. I never thought in the world that standalone ad company can have a premium multiple. Jeff Green proved otherwise. The
They're
issue is like
sitting
the
on
last quarter.
they sit on a lot of data. They see
Yeah,
I mean, they see
so much
so
data.
much data across, and how powerful that is in aggregate. Maybe the Instacart CEO can go be the COO there too, and just tack another job on. I want to turn quickly to Shopify because while we were yapping, they reported, and they had a rare miss. This is a company that is usually pretty consistently firing on all cylinders. They tumbled and were down 5% in the pre-market. They recorded second quarter revenue that was above estimates, but weaker growth, and subscription business also showing signs of weakness. GMV, that's gross merchandise volume, also missed. Curious to dig more into this one. Shopify is one of those highly communicative companies around earnings. So their president, Harley Finkelstein, who's great. I've interviewed him before. He's like always on the circuit. I'm sure he has videos out. I'm curious to see how they're contextualizing this and framing it. But yeah, this is an interesting one. I don't know if people saw this coming. I know, Shy, we're still digesting what happened, but do you have any Shopify? Do you think there's a moat there? Or do you think that's a commodity business?
No, I think there's an app. I thought there was gonna be a commodity because they waved the white flag on their logistics arms. I was like, all right, so they're gonna be the Stripe of e-commerce. That's not exciting to me. But then I was like thinking about it in the agentic AI world we're about to enter. Who's gonna stand to benefit like one of the clear beneficiaries? It's Shopify because one part of my argument is SMBs are going to freaking explode because Katie, you can have 5 SMBs from AI agents doing all the work for you. You don't have to have a
Yeah.
20 FTEs per company anymore. Like you just have one AI agent, maybe two, and they handle things for you 24/7. And all you have to do is PM it. That's not that difficult. So in this new future world we're about to enter, like where are you gonna sell your products? Where are you gonna have your marketplace of this new SMB? It's going to be on Shopify's platform. It's going to be. So that alone is going to be a substantial tailwind for Shopify where SMBs are going to explode. They're going to 10, 100x, in my opinion. That means the transaction volume for those marketplaces on SMBs will also explode. That's also part of my thesis on DigitalOcean, which is the cloud computing company for SMBs. Either way, Shopify, like I think they're going to be just fine long term. They actually have a very important part of the new world we're about to enter. But like this macro environment, that's gonna the paralysis you're feeling from enterprises and consumers. That's a twofold for e-commerce platforms like Shopify.
Yeah.
So I think it makes sense on why they're struggling a bit. They're also priced to perfection. Like their valuation right now, entering this print was, I'm pulling it up. Wow, yeah, 60 times earnings, 60
Mm.
times free cash flow means. So like that's priced to perfection. So anything not perfect, which this was not a perfect quarter because they missed on margins, both like not significantly, but across the board. That's going to cause a dip of 10% or so. I don't even know what they're down today, but like it's more of a slight re-rate. It's not something detrimental. And as soon as the macro environment improves, like I think do just fine.
Yeah. And almost similar narrative to Google in a different direction. There was a report that came out. I don't think they ever verified it, but that Shopify was deeply testing infusing their tech in their ecosystem within OpenAI and Gen AI tools. And a lot of the commentary was around, future of e-commerce. You might not even be on an e-commerce website. So they're kind of thinking ahead of a world where, okay, it's not just about the website we're housing or the infrastructure. It's like what is the ecosystem that exists and how does that play within Gen AI? And that's fascinating to me as well. So I think they're an interesting one to watch. We have some other earnings rolling in today that we'll be watching. We have a firm aftermarket close that'll be very interesting. A lot of data coming out around people being unable to catch up or keep up with their BNPL payments. That'll be very interesting. I was able to interview their CFO, I see, after their last earnings call. So curious to see kind of how the impact of tariffs are on them. Lyft is reporting. Also, Shy, I don't know if you remember this, but we made a bet about the papal conclave. And it's funny how it's all lining up. So like last night, the black smoke came out. Like they couldn't decide who they wanted, which I have a lot of questions. Like, is it just like a bunch of priests fighting? Like, what does this look like? But also, we bet the winner is 10x the share price of SoundHound, which reports today after market close. So if we get a Pope and SoundHound earnings, we could have some results to the bet next week. We'll see. I don't know. Your guy, the pizza bagel guy or whatever his name is, he's not a front runner anymore. I don't know if you're tracking this. Yeah.
Boo.
Yeah, it's Parolin and okay. Oh wait, there's Pizza Ball at 10%. Pizza Ball and not Pizza Bagel. My bad. I don't even remember did I go with Parolin? I might have. We got to go roll the tape back. I don't know if our producers know. We'll see. It could be this guy from Ghana, which would be big news. So. Oh, I did. All right. Uh-oh. What if SoundHound announces something crazy? Because that's a volatile stock. They could jump. Then you're in for it, Shy.
Well, then I'll provide a firm some business for some buy now, pay later, pay you out.
Oh my God, buy now, pay later sports betting would be nuts. It's coming.
That's too dangerous. Oh my God. Every 20-year-old, 21, that's a new college debt is going to be that instead of actual education.
Oh my gosh. Well, God help us all. Shy, any final thoughts as we head into the day over here? Any earnings? And you got Crocs. Crocs is reporting today. That's another. I put that in like with your Skechers portfolio. But anything else you're watching out for today as we get into it?
Yeah, so I have a couple of names reporting this after the bell today. I'm looking at the list. I can't find it, but I have Transmedics reporting. I have Cloudflare, New Age of Defense. That one's priced to like 150 times free. I don't know what they're gonna have to report to catch a bid, but like they are expensive. But they're essentially the AWS of the new modern internets. They're reporting today. I have.
Real quick, Shy, is TMDX? Is this they like transfer organs?
Yeah, this is the one that the Shore Report was referencing them as the modern day Squid Games. I'm like, that's the biggest BS I've ever seen in my life. They're doing so well this year. I think they're up like 50%.
Interesting.
They're gonna show really strong numbers because you can track all the flight data for them every single day, and it's sequentially huge the past couple months. So like they're gonna report really strong numbers, and you're seeing the stock catch a bit from that. And this is another one where you asked me like, what's another company that sells hardware but has an ecosystem around it? That's Transmedics. Like they sell these actual products, but it's a logistics network around it that makes them money because it's a white glove service essentially.
Okay. Yeah. Fun fact too, Blade helicopters, they make more money transferring like medical things and organs than they do rich people to the Hamptons. If you look at go to their IR site and get the presentation, that's like it's so off brand, but they make a lot of money. Moving organs is good business if you can do it right, it sounds like, which makes sense.
Life critical, yeah.
Yeah. All right, guys. Thanks everyone for tuning in. We will be back Monday, bright and early, at 6 a.m. Pacific time, 9 a.m. Eastern. Shay, great to see you. I hope you have a great weekend.
Thanks, everyone.